Howdy there, folks. Welcome into today's video. Got a lot to discuss in today's video, folks. We've got to talk about not just what's going on in the market right now with specific stocks and some moves that I think are very interesting, some dynamics that are going on in the business community, but I also want to talk about what my expectations are for tomorrow. Tomorrow is an absolutely massive day. I think everybody in the stock market knows what's going on tomorrow, and we're going to discuss that, and I'm going to get into kind of my expectations there and what I think is going to transpire and kind of my positioning going into this, okay? Hope you guys enjoy this as always. I appreciate everybody for joining me, being subscribed to the channel. Thank you so much, okay? So first off here, I pulled up my big tech watch list, right? Right when I woke up this morning, Apple was outperforming everything. I mean, everything, which is shocking because it's not usually the situation. Like if it's a down day in the market, Apple might go down, let's just call it less than everything else, but it's very rare, and I mean extremely rare. Like it never happens where I open up my big tech watch list and Apple is the best performing stock of everything. So as soon as I saw that, my mind was like, okay, there must have been either an upgrade today that came out for Apple, or they must have shown like very strong demand for their newest iPhone over the weekend, or what is seen as that, okay? And sure enough, one of those two situations was the situation, okay? So it is seen as an overall demand picture for Apple's latest product suite. iPhone demand indications are strong following the launch, and while similar to last year, the mix continues to be more favorable toward the Pro models. Lead times for the two Pro models are already extended relative to last year. Delivery lead times have already reached extended lengths 1 day after launch versus extended lead times 1 week post-launch for the iPhone 13. Amongst the remaining products, lead time-based demand indication for Apple Watch Ultra is also quite strong, which I kind of, when I saw that product, I was like, oh, I could picture a lot of people buying that just as a flex, just because it's going to be the most expensive Apple Watch. It's like $800, right? As far as the US and China, in the U.S., week 1 delivery timing for the 14 and 14 Plus tracks to the first available dates, September 16th and October 7th, which is consistent with both 13 Mini and 13 tracking the first available dates, whereas the Pro and Pro Max lead times have extended lead times of 35 and 42 days respectively. Relative to the in-store lead times track the first available dates, and limited SKUs available for the 14 Pro and 14 Max. Recall the U.S. accounts for 35% of iPhone shipments. From what I've seen, China looks decently strong as well as far as the Pro models. Now, a couple things to factor in here, okay, that I think are very important. One is, think about this for a moment. I think this is very important for everybody watching this, right? Who are the people that are usually going to put in the first batch of iPhone orders, right? It's going to be the super fans for Apple, and it's going to be usually people with money, right? People that, have a good amount of money and they just always want the newest iPhone. And so no matter what Apple comes out with, they're always going to be there to buy the newest iPhone, right? And so that gives us a pretty good indication of the demand for people with money, right? But the biggest thing with kind of Apple's numbers over the next year that people are wondering is, or the middle class going to go out there and buy it like crazy, right? And then we still have to see. Just because you might have got a lot of business owners and a lot of people with money that went ahead and put in these orders early. What about the rest of folks? And that's the numbers you really start to see as the kind of the fall time quarter rolls on. And then once you get into the spring quarter and the summer quarter, you really find what the true demand for that iPhone is. Does it stay strong or does it fall off a cliff, right? And so I just think this is something important to keep in mind. However, this is good news overall. It's better news than not, let's just call it that. And from my understanding around supply chains for Apple, it doesn't seem like anything's really messed up from everything I've kind of heard and listened to on conference calls of other semiconductor companies and things like that deal with Apple. So that's good news. So overall, I would say it's good news, but I don't think we're out of the woods when it comes to Apple. Let's just put it that way. It's one thing to put up a great opening weekend, but can you put up those numbers over the entire quarter, right? Which is going to be very important, the fall time quarter, and then put it up in the spring quarter and summer quarter, because that's where Apple's really judged in those months, and that's where we see the true demand of how their phones are really doing. Okay, now, in relation to Apple, I thought this was very interesting. So if you don't know Goldman Sachs is seen as the premier investment bank out there on Wall Street, okay? They're usually the most well-run and all those sorts of things. But recently, they've gone into the consumer business, which is not something they usually do because Goldman Sachs is known for dealing with high net worth individuals, okay? But Goldman Sachs has decided to go, let's just call it lower tier with some of their products, right? And they're dealing with a lot of folks, like a quarter of the Goldman's card loans are given to customers with FICO scores below 660, okay? Interesting, that's all I'll say about that. And it looks like Goldman Sachs' loss rate on credit card loans is the worst among big U.S. credit card issuers, well above subprime lenders at 2.93%. Wow, okay, that's extraordinary to think, and to think it's Goldman Sachs, like it's very telling. But, it seems like I don't want to say they're desperate to try to build out that consumer business, but, when you start taking on these sorts of numbers, and when you start talking about FICO scores below 660, it reeks of a little bit of desperation, right? And I don't think it's a good look for Goldman Sachs' traditional business. When you see articles like this on the front page of CNBC, Goldman Sachs has a prestige to live up to. They have let's just call it, they have a very strong brand that if you are somebody that is wealthy and you're looking for, an investment bank to either manage your money or help your company manage money, right? Or deal with investment banking industry, usually Goldman Sachs is where you're going to start because their brand reputation is stellar. It's absolutely amazing. And they give you that feeling of like dealing with the best, right? But when you see headlines like this on the front page of CNBC about, a quarter of their customers have FICO scores under 660 and they have the worst, default rates we're seeing out there, it's not a good look for their brand. And brand is very important in that industry. And so this is going to be a very telling situation on where Goldman Sachs takes their consumer business, because I'm telling you, this is not good for their brand. It's damaging to their brand, in my personal opinion, as somebody that let's just call it, has tracked Goldman Sachs for over a decade and looks at all these sorts of things and like how is this brand kind of come across. I do not think it's a good look at all, okay? What is a good look is Goldman Sachs is firing a bunch of employees, which is interesting. So every single year, if you didn't know this, the bank basically has this annual employee cuts, essentially, where the lowest performers are essentially cut between 1% and 5%. And this is something they've done for a long, long time, which is, I think, something all the big tech companies need to start doing, and companies in general. Because, if you're a company that starts having tens of thousands or hundreds of thousands of employees, you're going to end up having some trash in your company, man. Just bottom line, some really poor performers, some people that just aren't pulling their weight. And those people, they pull down not just the entire organization, but they pull down their coworkers as well. And I've dealt with those sorts of folks in many different businesses I worked at in the past or I've ran, where, they bring down everybody. When you got a really low performer, a lazier person, they bring down everybody and they bring down the entire organization. And no one that's a top performer wants to deal with those low performers. It's annoying to them. It's like saying, you're Michael Jordan and you got to play with a guy that doesn't really care about basketball. It's not going to work, okay? It's like, no, okay? No. In terms of some stocks, I own that we're making some big upward moves. There's, not a ton that we're doing huge moves today, other than FUBO, which we'll touch on in just a moment here. Something interesting going on there. But, Palantir had a decent day today, up over 2%. Amazon's decent today. Foot Locker, Wynn, Beyond Meat. But nothing too crazy out there today. But FUBO, this is a stock that since the beginning of July is up over 100%. I mean, it's had a pretty sharp move just since July, essentially. And what's interesting about this is you see that stock price trend there, right? Up over 100% since the beginning of July. There's a clear correlation, essentially, between the stock price and a metric I want to show you right now. And it literally follows each other to perfection. And essentially, as this increase, the stock price increase. And it's very, very interesting to kind of see this play out, and it's literally followed it perfectly, other than this one freakish situation where, like, for a couple days, I don't know if it went big on WSB or I don't know what happened there, but there's something weird happened in the stock, went insane for like literally a couple days. Outside of that, it's been almost a perfect correlation. And it almost makes you think, is there something going on algorithm related here? Okay, check this out. So if you go Google Trends for FUBO TV, okay, what you will find is basically since the end of June and the beginning of July, the Google Trends just started going up and up and up and up for FUBO in a massive way, obviously, right? And the stock price followed the exact same trend. And isn't that interesting, right? And so almost sometimes you got to think like, are algorithms somehow reading this information, right? And therefore making buying and selling decisions, because how is it literally a perfect correlation? Think about that for a moment, right? It is absolutely perfect. So obviously you guys know how I feel about that one long term. As of right now, I own 17,777 shares in my ally account for FUBO. When I look at this stock, kind of something I'm considering, okay, because basically I own Netflix in the ally account as well. And I'm trying to figure out if I want to cash the Netflix shares and put that money also into FUBO. And I don't know, the hard thing for me is I think Netflix is still undervalued. The other thing is I think Netflix has fairly low risk. FUBO obviously has a lot more risk for their business model than something like a Netflix. The way I kind of look at this is, FUBO has, you can't even compare the upside potentials between FUBO and Netflix. It's like FUBO's upside's ridiculous. Like if they make it through this next, let's call it year or 2 years of kind of hardship, which I think it's going to be less hardship than people are expecting. But as long as they make it through that, that's like a 10x, 20x, 50x type stock. Netflix is not that sort of stock nowadays. It's just not anymore. It was back in the day, but it's not anymore. But also FUBO comes with big risk because they're not expected to be profitable over the next couple of years. Netflix is already a profitable company, right? Well established. No kind of question marks there, right? The only question is how much are they going to grow in the future? 5%, 10%, 7%. So yeah, it's something I'm considering. I'm mulling over the decision because I'm not really sure what I want to do with Netflix, although I do think it has more upside over the next several years. It's already ran 30%. I'm probably not going to buy more of the stock, to be quite frank. And so I'm kind of I would call it no man's land with Netflix. And it's just something I'm considering. And, those are tough decisions you have to sometimes consider in your portfolios, right? Now, in terms of the market today, it's green across the board, but you can't get too excited about this move. It's still an uncertain move for the market. And here's why. You saw what it was. That move's driven by Apple, okay? Apple's such a huge weight that move today is driven by Apple. Because when Apple goes up, it pushes all the indexes up. It can bring other stocks with the semiconductor stocks. And how the algorithms are basically kind of managed that. If Apple stock goes up, it brings up semiconductor stocks that are in relation to Apple, which can bring up all the other big tech stocks in general, right? And so, I looked out of the market and it seems to me, if it wasn't for Apple making that big move today on the positive news around likely iPhone orders, I think the market would be flattish today, to be quite frank. But because we got that news in relation to Apple and it looks like demand is pretty darn strong so far, at least, that's pulling up the entire market today, okay? But I think that's just kind of important to kind of look at it from that perspective and not get too excited there, okay? Tomorrow's the massive day, and I mean absolutely massive for the stock market. And here's how I think about it, okay? So tomorrow, if you don't know, CPI numbers coming out. Everybody's going to be looking at this. We've had 1 month where things trended the right way. That's good. Now everybody's kind of expecting, I'll show you the numbers in just a moment. But, this is just a huge deal. There's nothing bigger in the stock market right now. Now, I feel very comfortable going into this, essentially, okay? And the reason I feel so comfortable going into these numbers, essentially, one, the market's incredibly bearish going into these numbers, okay? So basically, as of Friday, as far as what investors are thinking on the stock market the next 6 months, only 18% are bullish, 53% are bearish, compared to historical averages of 38% are bullish and 30% are bearish on the market, okay? So, time and time again, investors get things wrong, time and time again, okay? Think about when the market was the most bullish over literally the past year. It was right when the market peaked. Right when the market peaked, the market was the most bullish. 48% of investors were bullish on the market the next 6 months. What happened over the next 6 months for the stock market is it absolutely tanked. You had everybody bullish that probably could be bullish. When you start talking about 50% people bullish, yeah, you're getting up there in numbers, okay? You had a very low number that was bearish on the market, and everybody got absolutely wrecked. Everybody. And didn't matter what stock you own, you got wrecked over that next 6 months, right? And so I feel very comfortable, seeing that how many people are bearish. I feel great. I feel great about that, to be quite honest, because these people are wrong again and again and again and again and again. Maybe this time they'll be right. They'll probably be wrong. It's just how it always works, okay? Next thing is, I think the expectations for inflation, folks are expecting 8% up year over year. I think we could come in potentially lower than that. I don't want to get too excited, but I think there's there's a higher probability we come in lower than expectations than higher than expectations. We've had energy prices decline considerably over the past month, and I mean considerably. I'm not seeing as much real world inflation, which I look at so many different kind of like data points of like what I call real world inflation. And I've seen a massive slowing over the past several months as far as all that goes. And so I think there's a potential that we come in with a better than expected number. Now, if we come in with a better than expected number in terms of a number that's lower, right? It's going to be very positive for the market because that would be 2 straight months of not just a decline, but potentially a little better than expectations were in regards to that. If you start talking about 2 months, investors start feeling a little more bullish on the market, right? But if then we can get a 3rd month in a row, then that's the point when everybody starts talking about, oh man, the Fed could be done raising rates this year. And they're probably not going to have to raise rates at all next year. When you can get 3 and 4 straight confirmed months, that's when investors start feeling very good about the market and very good about, let's just call it the business climate, okay? And then we're going to be at a place where rates are going to be pretty elevated, and you could get a potential there where essentially we could be talking about if the economy got into any real problems in 2023, which that's still a big debate, if that's going to happen or not. But if we did, we obviously have a lot of room to kind of lower rates from there, okay? Assuming they raise another, let's say, 50 basis points in this next, let's call it next month, or this month actually would be, and then raise another 25 basis points before the end of the year. So that's just kind of some food for thought there. So I feel very comfortable kind of with expectations not being too crazy, okay? Another reason I feel personally very comfortable is I have a good cash position now at this point in time. So if there's any sort of, let's say, numbers come in much worse than expected, I'm in a position where I'm ready to buy. Like I could buy, multi 6 figures, whatever. And so I feel very comfortable. And also, if numbers are, let's say, lower than expected and the market rallies big, I've been buying stocks like a beast in 2022, like most ever, pretty much. So I'm in a position where either way, it's fine for me. It's all gravy. It's like stocks go up, I make money, sweet. And if stocks go down, I get to buy ownership in companies for a cheaper price. Like it's all good for me as far as that kind of either way, right? And that's kind of gets into a little bit of putting yourself in a position of power in the market. The folks that are usually not in a position of power, there's 2 groups of people that are not in a position of power tomorrow, okay? Those groups are the people that are all in the market and they have no money on the sideline because you're hoping that things go right? And if they don't go right, and when we tank, you got nothing to buy with, okay? They're the group of folks that aren't in a position of power tomorrow, or essentially, let's call it the group of people that don't have much invest in the market, right? Because if the market starts rallying, right, and the whole massive recession never comes, the whole end of the world doesn't come, oh my gosh, you're going to be caught so far off sides in that situation because you're not deployed into the market the way you should be, right? And then you could start, having to buy in October, November, December. If the market continues to rally, you could be talking about you're paying 50%, 70%, 100% plus more for certain stocks out there than other stocks, right? And so that's just kind of some food for thought. It's the people that are either all in or hardly got anything in this market that are the ones in a position of weakness in the market, okay? They're the folks that could be in a position of weakness or the ones that are insanely heavy in short positions and things like that. And it's just, dude, like no one's bullish on this market. Like who you hoping is going to sell now at this point? Like who you hoping is going to sell? No one's bullish. Everybody's already bearish. That becomes a tougher and tougher proposition, and that's why we're seeing it become a harder and harder thing to get this market down. Like look at how many stocks have bottomed back in June, and it's so hard to get these stocks down back to new 52-week lows or the market down. It's because everybody's already freaking bearish on this market. And it's like, okay, what are we going to do from here, man? Where are we going? And so, that leaves obviously positioning for the upside. So, always put yourself in the position of power. And by doing that is usually you have quite a bit invested in the market, but you always have some sideline money that's ready to go in case things go south. And so either way you win. So yeah, hope you guys enjoyed this video. As always, obviously tomorrow is an absolutely massive, epic day. If you haven't got to check out some of the videos I posted over the past couple weeks on the channel, make sure you guys check out those. Sometimes folks say, they're not notified when some of these videos come out and whatnot. So, I'm always coming out with content. So there's definitely some good videos in there. Much love as always, and have a great day.